Okay. Hi, Nalia's team. I'm Layla, and I told Nalia I would jump on her website and post a little bit of information about taxes. I know that time's coming up and everybody's freaking out. So, a little about me so that everybody knows exactly where this information is coming from. I'm an accountant. I have a degree in accounting. With that said, I am not a tax accountant. There is a huge difference. So, you need to be aware that what I'm telling you is, I mean, I know more than most people know about it, but it's not, you really do need to go to your actual accountant for specific questions. So that's the other thing I was going to mention. I love all of you, but please do not bombard me with a bunch of questions, because I can tell you right now, I'm doing 4 other people's books plus a full-time job plus this lipstick. I'm not going to have time to answer individual questions on stuff. So this is more of just a general guideline to get you going. And then, like I said, reach out to your tax guy if you have specifics. But normally what I do in my job is I get all of the information ready to take to your tax guy. And so that's what I'm more going to talk about. And bear with me, my voice sounds horrible because I'm just getting over a cold. So most of us here, unless you're making huge amounts of money at this, most of you guys I think are probably just starting out. You did not open like an LLC. So this is more for the folks that are just doing this, like, you're like, oh, I just decided to sell makeup and now I don't know what to do for taxes. So those kinds of people are going to, they're going to do what's called a Schedule C under your personal return, meaning they're not going to do a separate return that's just related to your business, okay? That's what most people do when they start off with this kind of stuff. So the reason that's important is because a lot of this stuff is going to flow right into your own income tax return. And it's just going to appear like it's like on your 1040, there's a box 12 that says business income. And basically the way it works is they take what you pulled in sales minus all of your write-offs, and then whatever's left over, whether it shows income or it shows a loss, flows through to your personal tax return, okay? So that's kind of how it works, the general idea of it. So as far as what you're gonna write off, I get a lot of what can I write off? And people are worried that, what they can and can't write off. Let's talk first though about income. Hopefully most of you have been depositing the income in a way that you can keep track of it, I'm hoping. I can see where a lot of people probably took in cash and did not keep track of that. You probably need to start if you have not. I opened actually a separate business account, which literally it took me 5 minutes to walk into my bank and say, can I just have another checking account that's attached to my personal checking account? And they opened one. And then any amounts of money I take in, I have put into that account. So that's an easy way I can go in there and pull up the deposits, and I know exactly how much income I took in. If you did not do that, if you've been taking payments through Square or Facebook or Venmo, you could go into the activity screens on those and add up the amounts of money that was deposited to get your sales, okay? So that gets your sales number. Then the things that you can minus away from your sales are all your write-offs, and one of them is the cost of goods sold. Cost of goods sold is basically going to be what you paid for the product. So go onto the Synagent's website, and I think I want to say it's under the business tab, and then the first option, I think it says invoice history. You can go in there and print those off, and I believe they do have a dollar amount on the bottom. Add those up, and that's going to give you your cost of goods sold. And while I'm talking to you about this, let me back up one little thing. If you walk into your accountant with a bag of receipts, you're probably going to pay out the nose for them to go through all that. So I would itemize this stuff, put it into groups. This is all the cost of goods sold. These are all the receipts from Synagent's, and this is all my office supplies, and this is my postage. Like, put those receipts in a group and add them up and do a grand total, because that will save you money in the long run. Most tax accountants kind of expect you to do that, and if you don't, I know a lot of them that actually charge by transaction. It's like $2 a transaction. or they charge a very large rate per hour to dig through that stuff and go through that and do that. So I would organize that stuff beforehand so that you can go in and say, you know, here's exactly how much I owe. Let's see, what other thing? Oh, and I'm sure there's some people out there going, I'm going to do my own taxes, which is fine if you want to do your own taxes. I don't actually recommend that. Like I said, I know more about something's beeping in Lilia's house. I'm not sure what it is. Anyway, I know more about taxes than most people, and I won't do my own taxes because I can tell you these people, the reason there's a difference between like a financial accountant, which is what I am, and a tax accountant is because these guys go through continuing education classes every time a law is passed that affects taxes. So we don't necessarily know all of that stuff. They do. And you would be amazed at the amount of write-offs that they can get for you that things like TurboTax can't. TurboTax is a nice, simple, everything goes easy, nothing's ever messy type of program. But if you have anything that's a little bit different or, you know, it just isn't going to be able to catch everything. And I'm telling you, the tax guys can.
I can attest to that. I used a tax guy thanks to her last year for the first time. And he found tons more write-offs and saved us a ton more money. We ended up getting a bunch more back than I spent on like what I would have done.
I think they actually had you do addendums for years past. Yeah, they addendums
like 3 years past and even saved us money. So I even had that money coming back. So Layla knows what she's talking about.
Yeah. So, and actually that's how I ended up going to the guy too. I did my taxes one year in TurboTax, and I owed $1,700 or something. And then I went to him and he ended up getting me something like a $2,000 refund. So it was literally a $4,000 swing. And I thought I knew what I was doing. So don't attempt it on your own. It's really not worth it. For a business return, like these little business returns I was telling you about, I think they're usually like $150. Then you'll pay for your own return. So it's going to be a couple $100, but it's money well spent. You'll get it back. Okay. So back to what I was saying. The things that you can write off. I'm just going to start spewing them off because I really don't have anything specifically written down. I'm just kind of coming up with this stuff off the top of my head. People ask all the time what you can write off. Anything that you've bought for the purposes of this business can be written off. So things like stamps. If you've bought any, like, well, I'm going to go down my little list kind of stuff, but it doesn't have specifics. Let's go like computers. Okay, regarding computers, if you bought a new computer, take the receipt in to your guy for your computer because he can write it off. You won't get the full 100% write-off this year, but they'll depreciate it over several years and get you the write-off over several years. If you subscribe to any kind of a cloud service, internet, all of those things, like internet's another one where if you don't have a line dedicated just for your business, like if you're using your home internet, you can write off, like, you have to come up with a percentage and they usually let you pick it. 50%, you know, I use it for 50% of business. That's what they're going to ask you. What percent do you use for business? If you use it for 20% business, you can write 20% of the bill off. If you use half and half home, half business, you can write off 50%. So anything computer related that you've used. I was telling people too the other day, if you print off invoices, copy paper, is if you're printing off anything for new distributors, if you're printing off distributor packets, the copy paper, the toner cartridges in the printer, all of that stuff's a write-off. If you have donated product to a good cause, that's a write-off. If the cost of whatever, the cost of the product, not the, if you gave away a lipstick in a giveaway, you can write off what you paid for it. So the $12.50, not the $25. If you did any kind of gifts given away, you bought somebody a cute little purse or a little lip thing, those kinds of things are write-offs. Let's see, office supplies. Your mobile phone. So if you have, and this is the rule was last year, again, I'm not a tax accountant, so talk to your guy, but last year the rule was if you had a home phone in place, a landline, you can write 100% off of your cell phone. So if that's the case, you should be able to write off your whole phone bill. Now, if you're on a plan with like your husband, like I can't take the entire write-off for my whole family plan. Like I have to go through, and if there's 2 phone lines on there, you divide by 2 and then you get that write-off. Okay, so keep that in mind as well. Any kind of packaging, like if you're buying envelopes to ship this stuff out, that's a write-off. If you bought business cards, those are write-offs. If you bought return labels, that's a write-off. The packages you put the lipstick in are those cute little, what are they called, bags, Nalia? I can't remember the, organza bags. All of that stuff is a write-off. Pretty much anything you pay for, like, and it's one of those, like, did you have, if you know it's a business write-off if you didn't need it before. So for instance, I had no need for a selfie light before we did this. That's 100% write-off, my little selfie light. So those kinds of things. And you know what, a lot of times, because I'm sure half of you are going, oh my gosh, I don't even know right now what I've bought. What I usually do is I will go through my Amazon account, because most of us are buying this stuff through Amazon. So go log onto your Amazon account, go through your history, and start looking at the invoices of what you've bought and print those off. And if you've bought personal stuff with the business stuff, I would start doing transactions just business by themselves, whether it's in a store or on like Amazon. Just do one order at a time. With just the business stuff on it. But if you've mixed them, you're just going to have to go through and minus out the personal stuff, so that you have, when you give the dollar amount to your accountant, that you're giving him what's just business related expenses. Okay, what else? Samples. Oh, okay, so testers are going to be huge. Like if you've got 25 testers, you're going to take 25 times $12.50. And that's a write-off. The shipping that you use to get the product to you, not just the postage going out to get to your products, but to your customers, but the shipping that we pay and the handling fee that we pay to get it to us is also a write-off. And that's actually that would be on the invoices for that you pull off a Synergent, so that's already configured into there. I'm trying to think of what else. Oh, okay, so we're all using these little any apps that you've bought, like the WordSwag or Pictogram or whatever. If you're paying for extra stuff like extra fonts and it's $1.99 here and there, all of that stuff's a write-off. So go look under Google Play. I think they have a history button somewhere that you can see what you've paid for on that. That kind of stuff's a write-off. I'm trying to think, is there anything else, Leah, that you can think of off the top of your head?
Did you already cover gas?
Oh, okay, so your cars. So, and I'm not sure, on those of you that are driving around in these lovely blue vehicles, I would take in your lease agreement to your tax accountant, because I'm not sure what they're going to do with the lease agreements. But there's usually two ways that cars can be a write-off. Either most people fall under, they just get to take this 55-cent mileage. You either have so many expenses that you can write off each individual expense, or they lump it together and go, you know what, we're just going to give you 55 cents a mile that you drove. And it really depends on what you have as to which method they can use. So I would take your lease agreement in with you. And then if you're, and I guess if you're using, actually, you know what, if you're using your own personal vehicle, which I'm sure everybody is, you're going to probably have to go with the 55 cents a mile write-off. And so they're going to want a rough idea of how many miles you drove. Someone was asking me the other day, like, how do you figure out mileage? Well, a lot of times you can even take just a piece of paper and put it up in the sun visor in your car. And just, if you're going to drive it down to somebody, drive product to somebody, just pull down, put what your mileage is. And then when you get back home, pull the piece of paper out again and write what your mileage is now. And then the difference between those two is, you'll add all those up over time, and then that's what you get to write off. I know it's kind of a pain, but there's also an app, I think, that Nicole mentions on her site, where you can track mileage through an app instead. So maybe even search for an app that will do that for you for this coming up year. But 55 cents a mile, and they will do all that for you when you get to your tax guy. But basically what they're going to ask you is, how many miles did you drive for the business? And you need to be able to give them something. Do an estimate if you're not sure. But the things that are, if you've gone on any trips, if you've paid to stay in a hotel, those kinds of things are write-offs. If you, like tomorrow, I'm going to go meet with a girl that wants to be a distributor, and we're going to meet at a restaurant. I can write off my meal for that. So The thing with mills are tricky because you only get a 50% write-off for that. So like if my mill's $20, they're only going to give me a $10 write-off. And the reason they do that is they're like, well, you got food out of it. And if they allowed everybody to start writing off food, people would take huge advantage of it because they'd be literally writing off every meal that they were at work for. So that's why you get a 50% write-off on those. And they usually like you to jot down who you were with at the meeting. So I usually just write it on the top of my receipt who I was with because it makes it a little bit more legitimate than, oh, I just decided to buy myself lunch and call it a write-off. Okay, so if you meet for business purposes for lunch or dinner, you can write off that meal. Let me think, what else? I'm trying to think. So yeah, the mileage is one. I think that's probably about all that I can think of at the moment. Oh, I will talk about people writing off their houses. I do have people ask me all the time, can I write off my house? You can write off part of your home to a home-based business. At the level that most of us are at, I wouldn't recommend it. And the reason being, like, unless you're making a ridiculous amount of money at this, I wouldn't do it yet. Because you're basically required to, okay, I have this home office, it's this much square footage in my house, and so each year they'll let you write that off as an expense. But when you go to sell your home years down the line, what's going to happen is the IRS is going to look and go, okay, you wrote this off as a business before. Now that you're making money on the sale of your home, you now have to pay what's called, capital gains. You're going to have to pay a capital gains on the profit you make on the home, because that's how they're like, well, if you got to use your house as a write-off when you owned it, you also have to pay taxes on it when you sell it and make money on it. Do you see this? So they're kind of like, if you're going to pick one way, you got to also pay when you make money. So I don't even want to deal with capital gains, claiming capital gains income. This is not fun. So I wouldn't do it unless, like I said, you're making a large amount of money, and then I would talk to a tax accountant and make sure that is the best route for you. Okay, I think I've rambled enough. But like I said, I would just start adding up the receipts, print off the receipts. It's important that you keep receipts. Your tax guy is not going to ask you necessarily for receipts when you go in there. The thing that I want everybody to be aware of, because I think a lot of people go, oh, great, they didn't ask, so I made it through. Or you get your refund check and you're like, I'm good to go, they didn't check. The IRS doesn't do anything quickly. So just because you get a refund check does not mean that they are not going to come and audit you, okay? They have up to, I think it's 3 years to audit, maybe it's 7, I can't remember. But if you were to not report everything and you think because I got my refund check, I'm good to go, they could possibly audit you. You would get a letter, 2 years down the line, says we're gonna audit this year your taxes, please submit all your forms. And they pull your bank statements and everything and look to make sure that what you reported is actually what they can tell from what you deposited is legit. And if they find errors, they will charge you a penalty, and then they will charge you interest for the amount of years that has gone by since they should have collected from you. So you pay interest on top of that penalty, and it can get a little spendy. So be advised that, it's just better to just report it now and just be done with it. No, and I had one more fleeting thought, and I can't remember what it is. Okay. I think that's pretty much the basics. So go with that, make yourself a list, summarize each one of your, like this is my office expense, this is my postage, here's what I spent, here's how many miles I drove, here's what I spent in cost of product, here's how much money I brought in. And if you go in with that, you're ahead of the game. You'll be good to go. All right, I hope this helps. I'm sure I will talk to some of you later. Have a great day.